Alright guys, hello everyone and welcome to officially the kickstart of the free boot camp. Yes, so today we officially kick off for free things, free learning on Forex trading, and today I'm going to be talking about beginner's guide to Forex trading in 2025. As a beginner, what you need to know, I'll be trying as much as possible to simplify everything, to talk about everything in detail I feel is necessary for y'all. Alright, so let's head on to TradingView. Well, we're going to talk about this as well. I'm definitely going to talk about this along the line. But first, I feel you should know what you're getting into. Yes, so let's begin. Many of you looking to start Forex trading, but because of one or two circumstances, you can't afford a mentorship, a paid boot camp or something. So yeah, this is the one for you. This is it for you. This is your chance. This is your chance to show, oh yeah, you actually wanted to begin Forex trading because it's free. So, Forex. Let's begin with the word Forex. Yes, Forex. Forex. I want to start Forex. But do you actually know what it is? Alright, so just a simple breakdown to what Forex is. Very simple. Well, for me, I feel others and books is gonna tell you too much detailing, I guess. Explain Forex in a more grammatical way, but cut the long story short, Forex is buying and selling. That's simple. Simple as ABC, it's buying and selling. Well, I would say if you don't know how to go to the market to buy something for yourself, by yourself, I don't think you are ready to begin your journey as a Forex trader. If you don't know how to simply just buy things, you don't know how to negotiate to buy something, then still this free boot camp is not for you. You come back when you're fully prepared, when you know how to buy and when you know how to interact with buying and selling. So Forex simply means buying and selling. Now, as I said, Forex is buying and selling. It will come to your head, what then are we buying and selling? Good question. In Forex this time, you know, normal basic markets, you can buy clothes, you buy foodstuff, you buy cars, you buy all those stuffs and etc. So in Forex, what you buy is currencies. Simple as ABC. Currencies is what you deal on in Forex. You buy, or as well, you buy commodities too. What do I mean commodities? Silver, gold, etc. and stuff. So Forex is simply just buying and selling of currencies. And I'm going to be listing what's it called, different currency pairs you trade, major currency pairs you trade in Forex. I know some of you may say BTC is Forex, but it is not. What is BTC? Bitcoin. As we all know, it's not Forex, it's crypto related, and that is another topic for another day. That's if I'm going to touch it, because I mainly just want to be strict on Forex related stuff, and that's it. So I'm going to be listing some different pairs, major pairs actually that we trade, and the major commodity we trade in Forex. So let me get this text too. So let's add text. So we have various type of pairs we trade in Forex. We have USD related pairs, where USD is the quote pair to the other currency. Okay. I know I lost you there, so let me try and break it down. Okay, now let's start first by listing these various major Forex pairs. So we have GBP USD, we have Euro USD, we have AUD USD. We have GBP JPY. We have USD CAD. CAD simply means just Canadian dollars. GBP means pounds. Euro. The EUR means euro. The AUD means Australian dollar. And I've been texting you. Forgive me, please. 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 Alright, I wasn't even paying attention to it. I was just focused on tapping. Oh, let me get, yeah, thank you. USD. Alright, so these are a list of some certain currencies, pairs you trade in Forex. And you will ask, why are they in pairs? I mean, you are exchanging something for something. Okay, let's say for instance you are getting a car. Yes, let's say for instance you're getting a car. You are exchanging your money for the car. So it's a pair. It's your money against the car, and that's how it fits. You want to get fruits, you want to get your clothes, they give you your clothes, you pay them your money, or you give them your card, they give you your clothes, so you'll be able to pay for the stuff you're getting. All right, so that's simply just it. So in this pairing, I would want you to take note of something. Well, this is the easiest phase of your trading journey. This phase one of what I'm explaining is gonna be the easiest ever you ever encounter, and I would call this phase the jotting phase. I mean, so you feel you've kickstarted something, so you just get your pen and start writing on something. So I mean, it's a morale to boost you up that okay, I started something, so now I'm in my journey. It kind of makes you feel there's a space that gets to your head that you're writing something. So put that aside. So in this pairing, you can see that we have one currency first and the other comes next. So the first currency you see in this pairing, it's what we call the base pair. The base pair is the main pair, and the other one is what we call the quote pair. So quote pair means the one traded against. I don't know if you try to understand what I'm saying. It's okay. Now for GBP USD, GBP here is the base pair, while USD is the quote pair. Yes. So I don't know if you try to understand. I don't know if you understand what I just said. So that's just basically it's like you're having BTC and you want to trade it. Sorry, you're having GBP and you want to trade it against USD. So GBP, it's like your main pair, while USD is your quote pair. Something you are trading against is the quote. Something you have, something you are on, something you are basically ideally on is your what? Base pair. Along the line, you're going to understand what I mean by that, but let's proceed to the next thing. So, well, as a beginner trader, as a beginner Forex trader, someone who's looking to start Forex trading, someone who's looking to get its financial freedom, well, you will need certain things to have on your mobile device, and as well your laptop or your iPad or anything you want to use or you have to begin your journey. And we have apps we use for trading, and this is one. I made mention of one when I said let's head on to TradingView. So yeah, so I created this folder so it will be easy so you could see how they look like. So this is TradingView. This is where you go on to position yourself, to arrange yourself, to have your analysis done, to have your strategy. It's like a rough sketch. This is where you go to solve. Let me use it that way. So in your maths exam, they give you a question paper and a solving paper. So your solving paper is that solving paper, it's your trading view. And for your MetaTrader 5, this is where you execute. So for now, just know these are the two apps you'll be needing as a beginner. So let me not just jam pack your head with a lot of stuff. at this begin phase. So now you know that Forex is what? Simply what? Buying and what? Selling. Good. Now you know Forex is buying and selling. The question that comes to your mind next is, how am I going to get into this trading? How am I going to participate in the buying and selling? So that will be your next question in your head. How to participate in this buying and selling that I'm talking about, or I have been talking about. So it's easy. So participating, you have to need a third party. You have to need a third party to play in, so you could participate in this digital market in real time. And how you do that is by having, let's say, middleman. Yes, that's the word, middleman. So these people, we call them broker in the industry. So broker are the people that connects you to the real market. Simple. I mean, when you get your car from a car stand or from a car show, there's someone you go meet first. You understand? So you don't just go there, open the car, kickstart the car and drive out, then pay. I don't know if you understand what I'm saying. I mean, there's someone who's going to attend to you. There's someone who's going to tell you, this is the one for your budget. This is the spec you're looking for. So that third man, that third person, that middleman is what your broker. And as a beginner, trust me, you don't want to how will I put it? Raggle yourself or rack your brain into thinking which broker is best for you. Well, with my experience and a lot of mistake I made during my time, during my journey, during my beginner phase, I made mistake to associating with brokers that are not even well known. So number one criteria, and the only criteria for me, I think you should use in drafting or choosing your broker, is a broker that everybody knows. I mean, you should walk up to me and say, I'm using this broker, and be like, oh yes, I know of them. I mean, they are all over everywhere. They have the social media handles, they are on YouTube, they are on Instagram. I mean, just for the brokers to be popular. So that's the only criteria I basically use. I mean, you should also, before getting to any broker, have good reports about this broker. And yes, I'm going to make it easy to you, so you don't go about searching for brokers or something. So the broker I use is Xness. Yes, Xness is the broker I make use of. I mean, I tried making use of other brokers. Trust me, other brokers are going to make you feel less of yourself, because some other brokers will be like, the least you could deposit is $100 or a $500. You understand what that means now? I mean, if you have $500, will you be trading Forex? That will be your reply to them. But I mean, that's what I'm saying. But Xness, you can deposit little as $10. Yes, you can deposit $10. I mean, they understand that people coming into Forex trading are not the worthy ones already. Majority of the people seeking to start Forex are people that want financial freedom. You know, they want to they're coming to make money. It's not that they already have money already. So I recommend that you use Xness. Yes, Xness is the broker I recommend you use. They are good. They have different trading account size, trading account type. They are nice. Trust me, in my time when I started my Forex journey, in fact, everybody, the people that I had my mentorship with, they all used Xness. In fact, almost everyone used Xness. You're Nigerians, you're in Africa. So I recommend Xness. Xness is a very, very good broker for you. I think there's this one also, Octa. Yes, Octa. Octa is another broker. Yes, reliable broker. Yes, but I don't use Octa, but I know people that uses Octa broker to trade. Well, the one I've used before, if you want to use the one I've used before, I recommend you. What am I typing? Is Ness, not sex, please. Xness. Yes, thank you. So those are the two brokers I recommend that you use. And like I said, they fall under the criteria I stated. They are well known and they have good reports about them. I personally have good reports about them. They're fast, they don't delay when you want to deposit, they don't delay when you want to withdraw or something. And yeah, that's all for, what's it called? The broker, the people that connects you, the people that enable you participate in what? In this digital market in real time. All right. Next, I'll be talking of trading hours. You're here to have your financial freedom, right? That's why you choose to trade Forex. You want to make a lot of money. But mind you, beginners, Forex is the hardest way to make the easiest money. Yeah, you will understand as your journey just proceeded. You will understand, and along the line you'll see actually why I made this statement, because it is very easy. Sorry, it is the hardest way to make the easiest money. Yeah. So we're going to talk about trading hours. Trading hours. We have 24 hours in a day. Are you just going to sit glued to your screen trading the whole 24 hours? No. Let's say a 9-to-5 job. That's why it's called 9 to 5, because it has certain hour limit to how or where you get access to working. That's why it's 9 to 5. So from 9 to 5, you should be at work. So that is your trading hour. So for Forex, for me personally, you will read books that will tell you London session opens by 8, round shoots in 5 because they collapse with New York session that starts by 1, round shoots in 10, blah 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 blah. All right, so here's the plain fact. Trust me. Let me ask you a question. Would you get on the chart by 8 a.m. and glued to the screen till 5 p.m.? Come on, it's tiring. I'm not even sure anyone could watch a movie for that long. Yeah, you need to have breaks in between. So personally, for me, I come onto the chart 8. If I want to trade, okay. Now we have different sessions in trading. We have the London session, we have the New York sessions, and we have the Asia sessions. Major sessions. Trust me, there are other sessions you're going to read up from your textbooks or online or other mentorship you've heard about. But the major ones you need to know, so you don't crowd yourself, you don't confuse yourself, is London, New York, and Asia session. So what's London session? London, we all know London, right? We know London, and London session supplements coming during London time. What's London time? 8 in the morning. I think we are 1 hour ahead of London, right? Yeah, that should be right. So London session means trading during London time. New York session simply means trading during New York time. And Asia session simply means trading during Asia time. Good. So London session, I trade only 4 hours out of all sessions. So you do the maths. So if London should begin by 8, so what's 4 hours from 8? Yep. So I trade just 4 hours in those sessions, if I'm trading those sessions. But would you like to stay up late? Like for me, I can't trade my sleep for anything. So I basically don't trade Asia sessions at all. I don't trade Asia sessions. So the two major sessions I trade are the London sessions and the New York sessions. Yes. So that's for the first part of your learning. And we'll be heading next to what you need to know, what we call pips and lot size. Yes, we'll be heading straight to what we call pips and lot size. All right. So pips and lot size. What's pips? And that will be what you'll be asking me. So it's pips, P-I-P-S. So simply, the simplest term, it means unit of measurement. That's all. In fact, let's bring it to reality. Let's relate it to our everyday life. We walk, right? And we run. Good. Each step you take, that's what we call a pip. So your left leg, that's a pip. Your right leg, that's a pip. And you should note this, that in every pip, you have pipettes. And you have 10 pipettes in a pip. Let me come again. In every pip, in every step you take in life, that's a pip. But before you raise, the motion of you, or the process of you raising your leg, putting it down to be just one step, that process, you have 10 pipettes in them. So that's how simple I can break it down to you. So we have 10 pipettes making up one pip. Yes, so that's everything you need to know for a pip. Trust me, you would want to increase your knowledge and want to, know more and understand more about the pip. But trust me, you waste your time, because basically I just want to let you know what it means. Not that you will be putting into use the meaning, but just because you've been making use of the word more often in your journey, so you should know what that word means. So you would not say you're like 8 months into your journey and they ask you what's the meaning of a pip and you can't tell. That would be very, very, very embarrassing. So that's simple. A pip is what? Unit of measurement. Each step in life, each movement, each tick, that's a pip. And that's simple. So what's lot size? Let's go on to lot size. Lot size. Let me put this here. Lot size. This is another term you'll be making use of. Another term you want to know how to use, how to control, and all of that. So a lot size, in its simplest term, it's the quantity. That's all. When you go to the market, you want to get veggies, or let's not use market. Let's say you want to get, let's think big. Let's stop using market. You want to go get your first car. I mean, you walk in and you're looking to get your car, and they'll ask you how many of these units will you be needing. So the quantity, that's a lot size. The amount of what you're buying is a lot size. It's like a package size. It's the pack, a carton. So this carton is the lot size of the noodles in it. I don't know if you understand what I'm saying. So if you're going to get a car and you want to get two units of same car, so that quantity, since you're getting two, so 2 is a lot size. That's simple. But now we are dealing with Forex. And what did I say we are dealing with when it comes to Forex? We are buying and selling currencies. So lot size simply means what? The amount of currency you are buying or selling in a trade. And that's simple. Simple. You don't really need the definition. You only need the definition so you can tell, yes, I'm a Forex trader. I mean, someone that works in a hospital, a doctor that has never or has no trace or no history or no record of wanting to learn Forex along the line, you ask him, what's a lot size? Definitely he will know. He won't. Definitely. So I'm only saying these things because you'll be making use of them. They are what you'll be making use in your trading journey. Not as if you did the definitions or something. So and the last one that pisses me off is, what's it called? Leverage. Yes, leverage. For every textbook you read, they're going to tell you wanting to rack your brain. Leverage is very scary, because I didn't put leverage into heart, but it's important for you guys. And leverage simply means what? The ratio of your funds, of your capital, of the money you are willing to get into a market. That's just it. It's the ratio of the size of your position. Like, how will I put it to make you understand? I don't know. Okay. If your first deposit in your Forex trading is $10, that is the ratio of what you have. And leveraging is what your broker, is the access your broker gives you. They are provided by your broker, is the access they give you to access larger or to control larger sizes in the market. I don't know if you understand why, Joseph. How will I put it? Oh, screw it. You really do not need it. Well, you need it when you want to open your broker account, or you want to open an account with your broker. So, okay, let me put it in a more simpler way. Let me arrange it. I've been saying things scattered, and let me just say it in a very, 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 very much approachable way, in a way you could jot down. Okay, let's say is the ratio of your own capital, of your own money that you have, to the size that you can control in the market. Yes, that's it. Leverage. That's what I mean by leverage. Yes, leverage. Simple. I come again. Is the ratio of your own capital, of your own money, to the size of what you can control in the market. Yes. Well, you can go on to read more about leverage. They are in textbooks, but I mean, you won't believe me needing them, the meaning of them. And when you need the name for leverage, you need the meaning to know how it works. But I mean, don't waste your time. It's 2025. Not that you are late, you are not late. You're still on time, you're still on check. So yes, that's all for peeps and Lotsize. That's simple. No other thing you need to know. Okay. Along the line, when I'll be explaining what's it called, your way around TradingView. Yes, I'm going to explain some certain things concerning peeps. Oh, let me just do it now. Let's do it now. So we can begin to, what's it called? We can begin to grasp more things. Okay, now you see that pips and you see that Lotsize, they are relating. In fact, you need one for one. So now here's a simple thing. For you to know your Lotsize, the amount of the currency you want to buy, or the quantity you will be taking or be selling, you need to know your pips. Yes, that's it. So without knowing how to say the quantity of your pips, you won't know the lot size you'll be going in any trade. Yes. Now let me make something clear. Let's head on to Euro USD, one of the pair I talked about, one of the major pair I talked about. So now, at times in textbooks, they want to waste your time, or other mentorship, they want to waste your time. It's mind-blowing. I mean, you have to keep doing maths, doing calculations, and all of that. They will tell you your bid, your asking price, and as a bid price, blah blah blah. We give you the pips you are on and stuff like that. But I come to wonder at times and say, why are these people actually putting us through this stress? I mean, if you come up to your TradingView, one of the apps I listed that you'll be needing as a beginner, it is all there for you. It has been solved for you. You don't need to do minors. You don't need to know what your bidding on asking price is. I don't know if you understand what I'm saying. So on here, I want you to do something. You'll come back to this part of this video and do something for me. So when you have your TradingView downloaded already, you have your account set up already, I want you to come up to tools. Yeah, it's different from when you're checking it on the laptop or something, but for a phone, it's same thing. You see down here, this guy that looks like a pen, it's where you, get the list of your tools. I mean, you should go through, look at this stuff. You don't need to favorite everything. I mean, you should favorite trend line, horizontal ray, vertical line, fib retracement, long and short. So let me explain what long and short mean. If you want to buy, long is the tool you'll be needing. But if you want to sell, short is the tool. In fact, okay, long and short is the term we use in trading, but also known as buying and selling. So when I said I want to go long on Euro USD, means I'm buying Euro USD. When I want to go short on Euro USD, means I'm selling Euro USD. So now, why am I explaining all of this? I just need you to have what's it called? These two, these long twos. For example, this is a long two. Like this is a long two. Yes. So how do you, what's it called? Know the lot size you will be needing in a trade. Okay. Now, to know the lot size you'll be needing in the trade, already you should know how much money you want to risk in a trade. Yes. So before you go on to say you want to buy Lexus, you already know that this is the price of a Lexus in the market. So you should know that this is the money I should be taking to a car stand to get a Lexus. I don't know if you understand what I'm saying. So before I want to say, or before I will say I'm going long on Euro USD, I will have to bring some certain amount of my money. So that is what I'm bringing to the table to be able to go long for Euro USD. Does that make sense? So knowing what you want to risk is one part of the story. So for instance, on this trade, I'm a beginner trader and I know, or I'm following a signal provided by some trading platform or some Telegram group or whatever. And they said, Euro USD, buy now, or buy at price this, your stop loss around this, your take profit around this. Now they gave me all of those information, but how am I going to know the quantity, the size in Forex 10 that I'll be needing, which is your lot size? I mean, I know I'm risking $10 in this trade, but is there any way I can impute $10 in where I execute my trade? No. What you impute is the quantity to the currency you want to get, the amount of the currency you want to get, which is your lot size. And how to get that is this. You know, they said PEEP is, to calculate your PEEP is, for instance, they told us to buy Euro USD at this price. So we are waiting. So when you wait for markets to buy, like they tell you buy limit is set below the current price of the market. You can see price is around this place, right? And we were asked to like, we were asked to like, buy Euro USD at price 1.16837. Definitely that price is below this area. So what we use our buy limit. I'm going to explain that when I'm telling you before the end of this video, your way around your MT5, and already I'm explaining your way around TradingView. So you should get this right. So when they tell you to buy at that price, it means we have to wait for market to come to this price before market buys. That's what it means. That was buy limit means. That's just what buy limit means. But when they tell you buy now means instant execution at market price. What will we do? We are buying, which will use our long two. Place our long two here because we are currently on where market is. Market action, market current moment. When they tell you market execution, you are executing yourself. So I'll just go and execute, but still I don't know how to get my lot size. That is why I'm telling you, no need for calculating, no need for saying what's the current market price, 1.17664 minus what's the stop loss, 1.17557. Before you do this all math, if the market should actually be in a good range and your analysis were right and the signals they were right, market would just start living without you. And you fearing that you miss out from this trade, you want to jump on the market. You jump on the market and still your stop loss won't be the same as how or as what you were asked to impute. your stop loss is definitely going to be larger. I mean, maybe I'm on my calculator punching this minus this. I mean, these are decimal places. It will take time. It's stressful, and market already rally up to this place. So if I jump in around here now without even editing the stop loss or adjusting the stop, you see mine is like bigger, but other people, they jumped in around there. So how to easily calculate your lot size? This is how you easily calculate it. So now on this long two, you will see something when I click on it. You will see on the downside the stated stop 0.00101, then bracket 9 in percent, and after the bracket you have 10.1 and all of that. So the only information I want you to take out here is the word 10.1. That's simple. Take out this 10.1. That tells you the pip of your stop loss. What is a stop loss? Stop loss is, this is where I'm willing to accept that I am wrong. So if market should keep coming down, and hit me, I'll be risking just $10. So I will lose $10 in this trade. In fact, stop loss is, how will I put it? I'm thinking of how simple to say this. Stop loss is my bailing out time, my tapping out time if I'm wrong or when I'm wrong. So stop loss is just simply my tapping out time when I'm wrong. So when I'm wrong and I'm out, what do I lose? Stop loss is, with stop loss, you could accurately calculate that I'll be risking and losing exact $10 if I'm wrong or when I'm wrong. So this is really stressful actually, but I'm trying as much as possible to make it very, 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 very understandable. So how does stop loss pip? Now we know that to calculate our stop loss pip on Euro USD is this. We take use of what? Just this what? 10.1. If I adjust it, what are we using? Just this other one, this one. This one, this 24.7. This one after the bracket, that's the only figure we'll be needing. And how to calculate our lot size is simple. Note this, now write down. I know you've not been writing. Now write down. For every pair that has USD, yes, listen. For every pair that has USD as its quote pair, you remember what I meant by quote? Quote is the one at the back after what? The demarcation of every two pairs. So for every pair that has USD as a quote pair, this is how you calculate your lot size. It will be the amount you are willing to risk, that's $10, divided by your stop loss pip. What did I say you should pay attention to in this long or short two? The one after what? The bracket, which is 24.7. So $10 divided by 24.7 divided by 10. Why are we using 10? Because it is what? Every pair with what? USD as what? The quote pair to rate. So that means you're saying for Euro USD, GBP USD, AUD USD, CAD USD, what other one? NZD USD, as long as USD is the quote pair, you divide by 10. It will be your amount to risk. If you're risking 10, 20, 30, 40, 50, that's the amount you're willing to risk divided by this value already given to you by these two, either long or short. So let's try short. Mind you, if you're a beginner, yours, this part that's blue in mine is going to be red, and this is a short. Now you see it's upside down. It's like flipping this to this. Now the same thing. After the bracket, this is the whole figure you need. This 12.2 for the short. So it will be the money you're willing to risk divided by that figure, which is I say you will be needing, divided by 10. Then you can actually get your lot size. So that's how to calculate your lot size. For every pair that what USD is the quote to the pair. Am I clear? Am I making sense? I hope so. I hope so. I hope I'm making sense. I hope I'm making sense. But for pairs that have JPY, what's JPY? The yen. JPY, Japanese yen. China, currency for Chinese. That's JPY. For every pair that has JPY as what? The quote pair, it's almost similar, same thing. Like almost similar thing. What you need is what? The amount you'll be risking divided by this same value after the bracket. This same value after the bracket. But for JPY pairs that have JPY as the quote pair, you divide by 6.2. Take note. Yes, you divide by 6.2. Are we clear? You divide by 6.2. All right. But for pairs that have CAD, Canadian dollar, CAD, as the quote pair, you divide by 7.0. Yes. Now we all know for each different pairs we have, it is the norms. It is the norms in Forex. You know, some other mentorship, they're going to tell you use a position size calculator. I mean, that will cost you to minimize, go to some other site or some other app, put in your values and the input, and the system will definitely just what's called calculate your losses for you. I mean, which is faster. I mean, I think this is faster for me because then when I was using position size calculators and these other long, crazy, stressful maths that we have you minus your entering price, your stop loss price, and get your lot size. Before then, trust me, you're gonna miss out on so many trades. So it's easy. You can take the video back to get the recap of what I said. So that was all we'll be talking about on lot size and PIP. That's all we'll be talking about on lot size and PIP. Now, for next, we'll be talking about what was it called? I want to walk you through your way around these apps. I mean, I already started briefing you how your way is around your TradingView. So this is your rough sketch, this is your rough sheet, where you calculate, where you make analysis, where you exhibit your skill, your talent. This is where you paint and everything. But on the other app, you know, I said two apps. On this app, the MT5, this is where you execute, this is where you enter, this is where you place your payment. Let's put it like that. Okay, you know, you've walked into some good places and you want to eat or get something. You don't, sometimes payment comes to you, but I know, but majority of the times you walk up to a place to make a payment. So that's how it is. This is MT5. This is where you walk up to make payment. Oh, now I got this downloaded so I could explain your way, setting up your MT5. So when you download your MT5, this is the first thing you're going to see. I call it MT5, so but the whole name is MetaTrader 5. So you should get used to the shorts, the abbreviation. So MT5. So I'm going to accept here, and they are going to automatically create me a demo account. Open an account, blah blah blah, your name. I say Grace, second name, date of birth. You're gonna input anything you want here. You're gonna, I swear, this whole place is stressful as hell. But let's do it anyway. Okay, you're gonna place your number. Is this necessary? Let's see. If it's not, then it's actually necessary to do it. Alright, let's see something. Yeah. This is not my correct. Forgive me. Alright, so I'm gonna put in my email here. Alright. No way. No way did I just exit that. That's crazy. Alright, so I successfully created the account, and then after that crazy error that just happened here. So this is where you come out to make payments. You can see you're still seeing what you're seeing on the trading view, but mind you can rough sketch on this area, but trust me, I solely plead with you to avoid some certain mistake I made during my time. Do not analyze on this guy. I have my reasons. This guy is not always 100% accurate. TradingView is where you go to analyze, where you go to look, where you go to solve, and here is where you come to just execute. That's all. So let me take you. Let me just take you around your way around this app. So we have quotes. These are quotes for different pairs. This is where on this quote top here where you have your addition sign, you can come here. This is where you can add another pair so you can be able to trade. So let's see which pair is not here. Okay. AD, it's here. USD. Okay, let's say GBP card. Is there a GBP card? Let's see. GBP card. Yes, there is. So now I'm gonna add this. Click on the plus sign, and that's done. I'll come back. You'll see it here. So when the moment you click on any of these pairs, the reading, the data for that pair is gonna come out. The same data you'll be looking on this guy. So anytime you switch, search for your pair, you click the pair, you're going to see the data of that pair coming out. Same thing with your MT5. But trust me when I say your MT5 is the only place you want to come. The only thing you are interested in doing here is executing trade, taking action, entering your trades. That's all. So this is where you change time frame, which I'm going to introduce you to later on. Just different time and different, each time has their own data. So now on here I was explaining that this is where you impute your lot size and all of that. Let's see something. So now you see this area, this figure where you have 0.01, where you have this place where you can edit, you can change to, you can change to 40. This is what I was talking about. This is the area where you impute your lot size. So after calculating your lot size, you come up to this place. The value you get after calculating your lot size, this is where you're gonna impute it. And mind you, we have different types of lot size. We have three. We have the standard lot size. Let's head back to trading. How did I forget that? We have the standard lot size, we have the mini lot size, and we have the macro lot size. Standard lot size, it's simple. Standard lot size just simply means whole numbers. Yes, standard means whole numbers. Standard means whole numbers. What do I mean by whole numbers? 1, 3, 40, 49, what was it called? 40, 50 or something, but it can be 50.2 and blah 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 blah. But I mean, you get the check when I say what I'm talking about, when I mean whole numbers. So that's what standard lot size is. And one standard lot size is equal to what? It's equal to $10. Yes. One standard lot size is equal to $10. All right. So for the mini lot size, these are lot sizes with 1 decimal place. Yeah, I think that will settle it. So there's lot size like for mini we have 0 0.1, 0.2, 0.5, 0.7 down to 0.9. And for your decimal places, it's in 2 decimal places. You have 0.1, then you have 0.11 down to 0.19 before you get 0.2. Still you get to 0.29 before you get 0.3. But that doesn't really concern you. What concerns you is after you've been able to calculate your lot size, this is simply where you need to impute the lot size. So for instance, I am entering a GBP card trade, and what's it called? My lot size after dividing my risk divided by the stop loss, the figure I told you to make use of in your long and short tool without doing all of those maths, and using a position size calculator, and divided by, now we are on card, you divide by what? 7. Remember I said it, you go back to the video and take note of the stuff. So for instance, eventually after our whole math with our calculator, the fastest way to do that, we got 20 as our lot size. Make that I put this 20, I'll just press save. That's it. That's how it is. Then you go to trade, you will see your running trades here. Now, I sold 20 without even putting a stop loss or anything. This is not an ideal way to trade. I'm just telling you how the lot size works. Please don't get me wrong. This is not an ideal way to trade. I'm just telling you how the lot size works. Simple. Thank you. So that's it for it. So you can click on it if you didn't, if you made mistake entering a trade without putting your stop loss. You can click on it. There's modify, there's close, there's bulk operation, whatever. So if you click on modify, this page will pop up where I could impute my stop loss, which is this price. Like I said, when you get onto TradingView, yours is definitely going to be red, and it's the default of TradingView. It's along the line when you don't like the coloring of red and green, you just have to edit. So if this is my stop loss for GBP card, when I click on it, you can see it top on this place, this blue line that shows on the price scale. That is the price I'll be imputing here. That's the price I'll be imputing here. So for the take profit as well, when I click on the take profit, you see this price too? This place, let me delete it so you don't see anything called blue. You see this price is the take profit, and you see this price is your stop loss. So here I come to impute what is it called? The take profit price. So that's it. You already see when you are right. Here was already red against you. When it's red is against you. You can edit this. Some crazy people edit it to be different coloring and all of that. So now we are in good profit. It's in our direction. It's favoring us. So that's why we are up. We are blue. So that's how you make money. This is what you execute and all of those stuff. So I'll be closing this because what's it called? It's not closing, I think network. Okay, closing position. Alright. So it's closed already. Now I'm telling you, I just told you how and where to impute your lot size with those maths, those simple maths I taught you. So when you get your lot size, this is what you impute. When you want to buy, this is a buy. When you want to sell, this is a sell. Simple as that. So now there are 3 thereabouts, more than 3, but the major ones, I think 4. Yes, should be 4. We have operating orders in which we use here on MT5. Remember I was explaining saying when the price you want to buy from is below the current price, it is called buy limit. When the price you want to sell from is above the current price, it's called what? A sell limit. It's called a sell limit. But when you are buying right where the price is, it's called what? Market execution. Now let's check on to what that means. Let's trade. Let me see if I can get my way around this, guys. Okay, now, good. Now, this area, you see top around this area, it's written, you can read market execution. That simply means what I just did. I came on by myself, I sold, I imputed my loss side and click on the sell button where market was, at the current price of where market was, and I executed myself. Market execution simply means what? You doing it manually yourself at the current price of market. So if I should click on this market execution, you will have all of this detail. But trust me, well, all they are important, but the one I make use of regularly on a daily basis is the buy limit and sell limit. I already explained what buy limit and sell limit means to you. When the price in which you want to buy is below the current price of market, is what we call the buy limit. When the price you want to sell from is above the current price of market, is what we call sell limit. But for buy stop simply means, let me explain buy stop. Buy stop simply means market is around here. Market is around here, right? Okay, let's put sell stop. Sell stop is if I click this place, this line I draw, or this line I just had, the line I drew rather. If I should click it has what? A price to it. It has a price to it. You see this price? If I should impute this price on my sell stop, it means when market comes to this price, I will be on the trade. But market has to what? Continue selling. Do you understand? So sell stop is like having a sell stop price, but if market is selling to that price, market hits you and trigger you at that price, it should continue selling. So it's like having to put sell stop here. So market just touched the line. So market should continue selling. That is what sell stop means. Inverse is this for buy stop. Buy stop is I put my price line around here, and what I want to see market to do is market should come, trigger my buy stop, continue buying. So that's just the whole thing you need to know for sell stop, buy limit, and sell limit. Those are the major four, but I use major 5, but I use major 3. Market execution, I manually execute myself, and what's it called? The buy limit and sell limit, when I'm waiting for price to come to my price, because my price is below the current price, I use the buy limit. If I want to sell, I'm waiting for market to come to my price above the current price, because it's what? Sell limit. All right, I think we're almost done with our way around this place. I think we are done actually. Now if you want to manually execute, you just have to calculate your lot size, put it in this place, and click on buy and sell according to your what? Analysis, according to your solutions of your solvings, according to your rough sketch. But if you are waiting for price below or above, you use limits order. And if you want to put the price above and believe when price gets there, it should continue going, you put a buy stop, and when you want to put a price below and market should get there and continue selling, you put a set stop. All right. I really just hope I did try to explain in the easiest way you all could understand, and I congratulate you if you made it this far. That means truly you're determined to learn Forex. You're determined to begin, what's it called, your trading journey in the year 2025, in the last quarter to be precise of the year 2025. All right, now we'll be going straight to what? Analysis. Forex analysis. Forex analysis. What do I mean by Forex analysis? Yes, this is the main deal. This is how. This is why you keep questioning yourself, saying, "How am I gonna do it? How do I know that this is where I buy from? How do I know that this is where I sell from?" So that skill, that knowledge that you will be having along the line, or be gaining along the line, is what we call your analysis. You know, I said this is where you analyze, this is where you do your rough sketch, this is where you look, interpret data analysis, and all of that. But under Forex analysis, we have three different types. We have the technical, we have the fundamental, and we have the sentimental. Yes, I know maybe you, on your pre-journey on reading books and jotting things down, you would see mainly technical and fundamental. So technical simply means what? Your strategy. Technical simply means your mechanic reading of the market. How do I mean? Okay, now, technically, let's put it this way. Technically, you can see market was trailing up on this area. Technically, mechanically, with your visible eyes, you can see market was moving up. Got to this point, markets sold, came down. Got to this point, market moved up. Got to this point, market came down. Market moved up. Market came down. Market moved up. Market came down. So this whole mechanic view, this whole pattern, you could understand that this is what is happening. That's a technical analysis. So, but for fundamental analysis are people that analyze news. Yes, let me try and break it down. Fundamental analysis simply means what? News. N-E-W-S. News. What's happening around the world? What are they releasing? What is good? What is bad? You know, sometimes when they say, when I announce against something, it means the other one should be good, while that one is bad. But when I announce something for it, it means that thing I'm announcing for should be good, and the other one should be weaker than what I announced for. So that's it. So there are people that just strictly deal on fundamental analysis. They look at past experiences, they look at past news data release, and they tend to analyze those news to be informed ahead, I would say, to be positioned, I would say, for the future market behavior. But as a trader, you would want to be needing, or you will be needing, trust me, technical and both fundamental. Along the line, I'm going to have a video for those two basically. But first, we will have to begin with the technical, because that is what most of you are waiting for. How to analyze. How can I start understanding, and how can I analyze? You understand what I'm saying? Now, what's the sentimental analysis? Sentimental analysis, to my understanding and to how I'll be explaining to you, simply means the norms. The norms that governs Forex trading. example of sentimental analysis. Now, let me give you a quick and snappy trick. Now, Forex revolves around the power of 3. Yes, I said so. According to past experience, Forex revolves around the power of 3. If you are seeing a point, not 100% all the time though, but it revolves around the power of 3. If you are seeing a point, market keeps reacting. For instance, this point, market reacts, went up. Market tried to come back. This point, it reacts, went up. Market tried to come back. You see, this is the first time it reacted, second time it reacted. You see, the third time it's coming. Trust me, that's going to be the loudest of all. What do I mean? Power of 3. 1, 2, 3. That's why I call it sentimental analysis. To my understanding, it's just the norms that you should know, that no one is going to tell you. Trust me, no one is going to tell you that Forex revolves around the power of 3. But with my past experience and my research, I'm willing to give you free content or free access to what I paid and strive to know, because not all fingers are equal. Not everybody have the money to pay for knowledge, but they have the zeal, the passion, and the discipline for that knowledge. So they too should have a chance in life. So yes, the power of 3. This is simply the power of 3. So because I know that for the third time market should react off a point, it will be the loudest, to be the longest, and the widest range, I will wait. Secondly, trading range. For instance, today market did this. Sorry. How can I do this? Let's just leave it like that. Market did this. What is the range? So yeah. Then Tuesday, you came to the market did this. What is the range for Tuesday? What is the range for Tuesday? Yeah. So yeah. So Tuesday created a little above what Monday did. But as long as you could spot 2 trading low volume days, Monday traded in a short range and you expect the market to do more than that, then what was it called? Tuesday traded in a short range as well. On the third day, which is Wednesday, they're going to break that range, and the range is going to be more than Tuesday and Wednesday. Let me give you an example on the chart. Let's go to a commodity, XAUSD, and let's go down to this place. This hopeless. Yeah. On this area, this is Monday. You can see it below here. This is Monday. This is Tuesday. But what happened? This is Wednesday. Are you seeing what's happening? Now, if you go on a smaller time frame, Monday did all of this. Small trading range. Tuesday did all of this. Small trading range. But Wednesday, what did we have? A breakout from this range. So that's what I call sentimental analysis. The norms. So I just gave you 2 secrets to expo. 2 things that no one is going to tell you for free. But you got it for free. Yes, you got it for free. So anytime you could spot, or anytime you spot slow trading range, you were like, market should do more than this. Market should do more than this. Market should do more than this. Why did the market not do more than this? You keep questioning yourself. Anytime you see too small trading volume, too small trading range, just know that you should get ready for the third day, because the third day is going to bring you more money than those 2 other days. So yes. So now I've explained that. I've explained where were we had those writings. Here. All right. So I explained. I can't even see what I drew. I drew the stuff. Well, let's say it's gone. I can't find it anymore. Okay. Let's say we've talked about what's it called? Technical and fundamental analysis. Under technical analysis, you have a lot of and different approach to technical analysis. You have the support and resistance, which many of you are used to. You've heard it, trust me. You have trend line, strategy, straight line, tool analysis. You have the indicators. Trust me, I personally, I don't use indicators though. But trust me, as a beginner, it's going to help you. And under this video, I'm going to recommend a YouTube page for you to go watch. What's it called? Indicators, strictly on technical analysis. The guy is a great guy. In fact, he was the first person that made me want to get into Forex, because then he has his time to always, spam us our email, and he's a reply guy, very gentle person. He's a reply guy, spams us our email, those motivational texts. Blossom, now is your time, you need to do this, you need to get to it, blah 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 blah. He made me start this journey, and I appreciate him in this video. So I'll be tagging his page at the end of this video, so you can go up to look at basic technical analysis. Mind you, his technical analysis is going to be different from mine, but I'm just letting you know what indicator is. Indicator is like a cheat code. It helps you to know when to buy, when to sell, aligning with your work skill, aligning with what you learn to be your strategy, with what you learn to be your technical analysis, your analysis. So I'm just saying, I'll be dropping it down on the description box so you can get access to his indicator classes. Also, it's free. He's a very good guy. A very, very, very good guy. Yes. So now, for the conclusion parts, again, I would say congratulations. You've learned the easiest phase of your Forex journey. I know some of you, not all of you, are new into what I just said, but I believe calculating lot size was new to you. The whole system on how I do mine is new to you, and as well, the 2 sentimental statement I made mention is also new to you. So please, I will urge you to stick close to this page, as I will be dropping some more free Forex trading concept, teaching, lessons, and cheat code as well. What I use in trading, well, no one is going to tell you, or no one is going to tell you what you won't find anywhere. Well, you can find it, but with long, deep research, which definitely I know it's 2025. You don't want to go through the stress, so I will make it less stressful for you. So if you find this video useful, I would want you to hit the like button and hit the subscribe button and turn on your bell notification on, so that anytime there's a new trading lessons video dropped on here, you get notified, so you don't miss out, so you can quickly grasp as much as you want, or as much as you can. So you can call yourself a trader, a Forex trader. So thank you very much for staying to the end of this video. I know it's a bit long. I promised to, because I had a lot to explain. I mean, it's a beginner video. I had a lot to explain, but I promise on next videos I will try as much as possible to limit the time to those videos. Thank you very much. See you next week.